All right, welcome February 14th. I haven't done a review in a while, but I just felt like today was a good reminder to sort of learn a lot of little lessons. And this doesn't come easy. It's just over time you'll start seeing patterns and you'll start understanding how the market moves. Ideally, you can keep it as simple as you can, which simplicity means you get in at levels. That's it. And I'll show you today's action. And it's always easy when you think hindsight. You're like, oh, yeah, that looks easy. But in the moment when there's a lot of emotions and there's oscillation of the candles in the market, you can get really emotional. But just take notes in this video or come back and rewatch. There's a lot of little things, tidbits that I'll be teaching because pretty much what happened today happens almost every day in some form or fashion. So this right here, this video alone is worth gold because this is just months and years of accumulation of knowledge and in practice of how to actually read price action and how to trade. So let's start off with how you should set up your charts. So again, if you've seen past videos, you want to set your charts up, where you have 30-minute candles to the left with 4-hour overlay candles, VWAP, and then the multi-day ATR levels. So you can see that this is the previous week's close. This is Monday, Tuesday, Wednesday, and then you have the bear pivot, multi-day or mid-range pivot, and then the -1 ATR. So the second thing you need to understand, well, let's get back to the right and how that's set up. The right is the intraday pivots, so it's called the day position, day pivots, and it's the same thing. You have your previous day close, bull, mid-range ATR, and +1 ATR, and then you have fibs in between. But then the candles are 5-minute candles. This is all critical on really understanding how to trade specifically in Q. I'll show you, how different tickers like SPX or ES, also could trade around it, but it has a different breadth and a different language around it. But specifically for NQ, this works pretty well. So first of all, you need to understand what is going on in the context of the day. So yesterday was CPI. It came a little hotter than anticipated, so they ended up dumping it and then coming all the way almost to a -1 ATR on the multi-day. And the intraday, I mean, they blew through the -1 ATR from the get-go. So when you have that volatility, especially when you're coming down to a major support and an ATR, you can almost expect some kind of rebound, or not even rebound, because you don't want to say gamble and all that and say, oh, this is what's going to happen. This is your best risk reward, to go long. Actually, a lot of people are thinking we're just going to keep taking, but the market likes to move where there's liquidity, where there's orders and stuff. So with that said, you have to play the price action based upon these levels and don't assume anything. So you need to just know where your support, where your resistance is, and play through that. And it's going to do it in its own time, right? And so you want to be looking for the best risk reward. So it's not necessarily the best entry. It's just, hey, you have a plan like, hey, I know that if I get in here, this should go here. And this is how much I'm going to make. And so why would you want to get in if you were going to make, a little bit? You want to really, using this ATR strategy, you really want to be playing and maximizing these ATR levels. And when I say maximizing, I mean, you want to get at least a 30 to 50 point move. If you can capture a full 100-point move, great, good for you, but ideally, if you can catch multiple 50-point moves every day, then you will grow your account very well. And I'll show you where these 50-point moves are, or even 30 points. There's 30 points happen 10, 20 times a day because of oscillation. So let's go back to the chart. So ideally, if you look on the 30-minute, see how I have this box right here, this gray box. The reason why it's a zone, because this is where things were bouncing off last week. So this was support. This was the low of the candle for the weekly candle right here. So that's where they probably were going to hold it. So if you weren't aware and you were so micro focused, on looking at just like this or even an intraday, you would have been caught off guard, and that's what ends up happening when you have this kind of push. So also, a lot of times when you see a push like this, the last hour or 30 minutes of the day, I mean, that's institutional buying. It's not. I mean, it could also be a squeeze, like a covering, but the mere fact the next day they gapped it above. If they would have just dropped it back below, then yes, then that would have been a squeeze. But the mere fact that they gapped it so high, they gapped it to the previous day's high of the day after the gap. So if you just draw this line, look at that. Miraculously, it opened right here at 790. 790. They opened it to the T. So use that in context. You'll see how that's important later. Because the high of the candle, so if I put this on a 30 or on a daily candle, you'll see how daily candles move, right? So it's all about understanding price action or like technical analysis and candlestick patterns to sort of understand the sentiment of what's actually going on. So, but again, that's more of reading the price action to sort of form a plan to anticipate the move. Like say, for instance, you can see today, this was Wednesday, in the morning they dropped it, then they recovered it, and then the afternoon they broke the day's high and almost ran it up to the multi-day bull pivot. So if you knew this, you could be planning for the afternoon and have more confirmation. If you got too emotional, then you would lose sight of the bigger picture, and that's not what I want to help train you to do. I want you to be proactive, not reactive. So let's go back to price action and understand on an intraday level. So you can see we opened at this 789. Immediately when the market opened, I'm not going to show you the 1 minute candle, but they basically shot it up to right here. You can't see this little line. It's right here. So they almost made it, and then they just yanked it and all the way back down here. I believe back here, and then this is a 5 minute candle. They closed it, back below the open, and then they dropped it again. So then from there, they scooped it back up. So as per the rules, you want to always be really cognizant of the multi-day, but really the intraday pivots. These pivots are just as critical, and you just have to trust them. As in, the rule states, where are you when you open? Are you above or below a pivot? I mean, yes, you're below this pivot, but you're above this pivot. You're sort of in between. But either way, you held the bull pivot. So now that is support until proven otherwise. They're gonna defend it. The only way they'll blow through that is if they hit it hard, and it's where it's unexpected. Very rare do I see them opening up here and then just like cratering it. If they would have opened down here, absolutely that's then resistance, and they'll probably fill the gap to then possibly either reverse it or come back down. But 9.5 times out of 10, if it's above here, this is support, and you just have to believe in it. And I'll show you right here. Let's look at a Renko chart. So if you notice, a Renko chart sort of gets rid of the candles and sort of shows you the oscillation of price action. So in the morning, they can never make it up to that pivot immediately. So this is also done based upon speed. So it's not necessarily by time. So if you look down here, it says 8:30 and then it says 8:35. You see how there's just a lot going on in that time period. Here, candles allow you to sort of understand the story that the market is trying to tell you. So you can see that they end up dropping it. So here was the open. So in reality, I should have had a line there, and I never did. So let's just go ahead and see what ends up happening. If I drew a box right there at the open, and you can say that's your line in the sand. And then when they actually broke back below, that's when you knew that they're probably going to make it down to the to test the bull pivot. It was about, looks like 8 points, 6 to 8 points off, and then reversed, right? So that's the challenging part about the pivots. The pivots are there to guide you, but you need to be either adding your position. If you were waiting and had an order right here, then you would have missed out on the move. I mean, it just is what it is. This wasn't necessarily an easy day where it played perfectly to the pivots. Again, the pivots are there to guide you with particular risk reward and what the market wants to do. But if you would have got down in here and scooped it, you would have had the move all the way back up, right? So this was, let's go back to the chart and let's go ahead and I'll fast forward it. So this was one 30-minute candle right here. So you will see that this is actually a doji. So you can't see the 4-hour candle on the overlay because it closed at the open on that first 30-minute candle. So you look back on the look back at this 30-minute chart, you can't see it, but you see this right here. This is a doji. That's an indecision candle right there. So what that means is you're also caught in between this pivot. So it could have done multiple things. It could have actually came back down the next TPO, which is the next 30-minute time period, or it could have kept on going up, right? But you have to base upon where the opening is, right? Or you just need to get in at pivots. That's it, and then just like hold it. So let's just I'm just going to show you the whole day, and then let's walk through of the different elements of the market and what you want to be looking for. And because emotionally, this is the hardest thing, and that's the reason why some of these moves are so powerful, because the market makers know that this is how the market is driven, on this emotion. So let's look at the multi-day. These FIB pivots are great, right? They're great in between to give you some context, because you can see how it dropped and then consolidated under, and then held and then came back up, or this came up here as a fake breakout, then reversal, But again, at the end of the day, you are in between levels. That's 200 points. You're playing with fire in the middle, because it could go either way. And that's the reason why what happened today happened today. So there was a lot of indecision back and forth, and this is really difficult for a lot of people to trade. It goes up and then goes down, then goes up and then goes down. You see all this red and green, all this red and green. But if you know how to play this and you wait, and I want to say, how do you know how to play this? As in, this is how you know how to play it. You make a thesis in the beginning of the day when the day opens, and you say, here, let's go back. What is the day going to bring? We're opening right here. You are in between these two pivots. So now you know your range. You know that today, somewhere we should be in here. So if you know that, then you know this is your line in the sand, this multi-day pivot. This is your line in the sand. I'm going to put a line right there. If it goes below that and holds and closes a 30-minute candle close, 30-minute candle closes, see how it has to close, then they may end up just tanking it down, right? So that's why it's critical to just trust in those pivots and not get frustrated. So anyways, let's go back. So you see that the next 30-minute candle at 9 o'clock Central Time, everything is in Central Time, they shot it up, right? And then they overshot it. So this is why it's super important. And I forget about this sometimes. It all depends on when that candle is getting to the pivot. If this was the last 5 minutes and it came right to the pivot, then I would be more susceptible of getting in and then getting in blind, just getting in at the pivot and then having a 10-point stop, for a potential reversal. But because of this candle, you could see was at 9:15. We got to the pivot by halfway between, in the halfway zone on this 30-minute candle. That leaves another 10 minutes, or 10 or 15 minutes actually. Because I think this was 9:20 for this candle to make a decision, right? So it could have came up and then came back down. It could have done a lot of things, or it could have just blown through, right? I've seen it many times where it just blows through. But you know what? If it blew through, then you missed out on it. Wait for the next opportunity, right? You just have to be patient on this. So also what you have to realize is, write this down. That first 30 minutes or hour is critical. A lot of times what happens is that they'll push up the first hour and then they'll fail it. They'll just yank it back. So technically we still were in a downtrend. We're in a downtrend right here. Why? Because look, you are in a below the bear. So the sentiment, you're going to have some selling until they make a decision. So let's go back and see what ended up happening. So when this next TPO 30 minutes opened, they could not go higher. And that first 5 minutes they dropped it and they closed it below there. If this was strong, they would never have done that. So if you went long here, which ideally this is what I ended up doing. I ended up going long right here, and I put a tight stop, right? If it was strong, it would not reject 10 points. It would just go, come back down, and then take off, right? So you get in and you expect the continuation. But the mere fact that they were slow around this, it took 10 minutes, that's danger zone. And the moment I got stopped out, I knew of what was going to happen. It was a fail, or it's not necessarily, it was, a failed breakout reversal, but what you can call this is a look above and fail. So a look above and fail is where, you're looking above a little bit and then you're coming back down. So it's stopping people out and then they just reverse it. So if you would have got in right here, so let's take a look at the Renko chart. So it gives you a little bit more idea of what's going on behind the scenes. This vertical line is the new TPO. So it came up, consolidated, new TPO. They came down. They should have kept on going right here. When the mere fact that they came back down, I mean, look, even on a trend on a Renko chart, you can see that right here, they broke the trend, and then they ended up coming down. And if you missed this, this was after the first 5 minutes of the next TPO. You could have got in anywhere right here are these candles, and then it never came back. So here's the thing. This is the problem with trading and the motions is when you have an idea, like you have to have an idea. You just have to risk, right? You have to risk. Like, hey, it looks like they might be breaking out, and they potentially could go all the way up to the multi-day pivot. Multi-day pivot is this right here. So that's from here to here. That's almost like 60, 70 points, right? So you have to have a plan, and that's the right thing to do. It came down, came back up, retested. This is ideally where you want to be getting in. But the problem is, and that's the thing, is just don't get so antsy with until the next TPO. You just never know. So you could do one or two things. You can wait till the next TPO and see what it brings. If it ends up taking off, then guess what? You wait till possibly a pullback, then you can join in, or you get in and then you have a tight stop, and if you get stopped out, they're breaking back below, and you wait for that 5-minute candle to close. If you waited for that 5-minute candle to close, then you knew that they weren't going to see this candle right here where they dipped below and they brought it back up, right? This, they dipped it below and they closed it. So then this next candle, they never actually got above. You could have got in here. And so when I say this, the problem with emotions is a lot of times when you get stopped out, you might be already down $200, $500, $1,000, I don't know. Whatever sizing you had, you would be down money. So you have a tendency to have a make it back-itis attitude. So I've been there, and I still struggle with that. To where once it starts going in your favor, you quickly want to take profit to make back what you lost. The problem with that thinking is you're not trading the chart and letting things play out. And this is a prime example of letting things play out. Like, holy crap. Look at this. In 30 minutes, that was a 100-point move with zero drawdown after the break in 5 minutes. That's it. See this all the time. Well, I say all the time. It doesn't happen every day, so don't expect it every day. But expect when you start seeing this, and especially when there's a lot of room down. So the next thing you have to do is you have to walk away. When you get in, set your stop and set an alarm. Set an alarm. If that alarm goes off on your phone and it says, oh, the alert went off, that means the likelihood you got stopped out and, the play's over with or they're reversing, right? But you stepping away and set yourself an alarm for 30 minutes or 25 minutes. If you did, that entire candle happened right at the very end of that last 30 minutes. So what do? This is the reason why I say the time periods make a huge difference. So you see down here, there's a clock. Use that to your advantage and watch the time and see. And when it gets close to the new TPO, you need to start exiting your position. You need to be very careful because anything could happen. And yes, this was a nasty candle down. I mean, ideally, it keeps going, right? But I just play the rules, and the rule states you take profit. You take profit because very easily they could have reversed it. But what they end up doing? They end up breaking it, retesting, and then finishing the move. So what is this line right here? This 17,700. What do you think that is? Any guess? Right here. This line right here is this line right here. I mean, beautiful. Like even right here, you can see that it actually broke through. You may not be able to see this wick, but it broke through and came back up, right? So you use that as a strong. So here's another play. This right here, this is 30 points, 30 points, 50 points. I mean, they were just giving it left and right. But if you had patience and waited, and when I say have patience and waited, these moves don't happen every day, right? So as a trader, you're not used to this. You're not used to this. This happens once or twice a month with FOMC or CPI when there's volatile news, right? There's other times where there is some moves, but this specifically is where it gets challenging because you're not used to this. So what do? You see that it's all over the place right now. So now you don't know what to believe. You're like, okay, this is the big pivot. This is the small pivot. It goes down. Okay, it's breaking. It's going to come back down. Oh, wait, they come back up. And then what? They broke it back down, and then, then they broke it. They broke it, the big pivot, but then they recovered it and then they ripped it up consolidated underneath, and then ripped it up again. And then the rest of the afternoon, it just was like, it was nutty. I mean, look at this. Nutty, nutty, nutty. All the way almost to the pivot, all the way back down. Held the pivot, looked below, and recovered. So this is taking people's stops out. Then what do? All the way back up. And then they just kept on going. They just kept on going. So, anyways, I'm using a lot of inflections, but do you sort of see, even on the Renko, you see the pattern? See how what protects you is being near a pivot. Being in this chop right here will drive you crazy. Putting all your effort into a pivot, even if you got stopped out and you had to get back in, or stopped out and got back in, you know, you're better down there than playing in the middle. So, anyways, already this video is being long. I'm sorry, but there's a lot of really good information here. So again, you're mixing your multi-day and your 30-minute candles, and you're also mixing your 5-minute candles to sort of see how they're reacting around certain pivots. So you see how this right here would have just chopped you to bits, you know, all of this, because you want to know what direction it's going. So you need to get in and just have a plan, and it either works or it doesn't. But that's why you also have to take profits. You just have to take profits and then either learn to flip, you know, or wait things out. But here is the great news of when you look at the big picture, right? So intraday, you're seeing all this, but this is where it gets really interesting and very powerful. So when I say powerful, I mean you have your look above and fail setups, your fake breakout reversals. You have your pattern breakout plays. Those are very important to understand possibly a direction, right? And then you just have little things that'll help you with price action. And when I say like patterns, is let me show you what technical analysis is and how it helps you form a thesis for the rest of the afternoon or the rest of the day. So let's go back to a 1-minute chart. If I went to a 1-minute chart, because I always do 1 minute on the first 30 minutes, right? Because there's not enough data in the day. If you notice, see how you have a lower high, higher low? Draw a line. When that rejected and they held it right here, that right there is what's considered a consolidation pattern, right? So once they're holding this and they came back up, the moment they broke out of it, they retested it, and look, you're also above VWAP. That tells you that they picked the direction, at least temporarily, right? But you're in between these pivots. So what do? They defended this and VWAP, and they never broke below, and then they ended up shooting back up. Here's another pattern. You see the consolidation? Up, down, up, down. This is a lower high, higher low. This is a flag. The moment they break out, boom, next move is up here. So a lot of times moves, they don't just happen in a straight line, right? Sometimes it takes a little while to consolidate. So those are patterns right there. And you see how also you have this consolidation. I mean, even this is on a 1 minute. This was actually a pretty interesting pattern right here. Here's your consolidation, break below, and then now you go down. So would you say, would one say, oh, would I rather play 1 minute candles or 5 minute candles on the day? You do what is best for you. For me, I've realized how playing a 5 minute candle and seeing how it closes is really powerful on the sentiment of whether they're scooping things up, you know, or they're rejecting. So let's go back to the chart. So that's a pattern right there. I'll show you some other patterns. So this is why it's important, at least on a 5 minute, because that's a bigger time frame. There we go. We're down here. Is this right here. So anytime you have a lower high, higher low, right? You draw a pattern. So right here, comes down, comes up, comes down, comes up, right? So now you have this pattern. So you're also at support. So now you have a potential double bottom. So here, and they tested it again here. So this is a 1, 2, and then break. And where are we at? We are now above the pivot. They recovered it, right? And you see these wicks on these 30-minute candles, they're buying them up. So with that said, when this breaks out and it's near a pivot, you better believe, because if you've seen in past videos what I've taught when it comes to consolidation plays, when they break it out, wherever the breakout is, if they ever go back below that breakout, it triggers stops and it gets violent. So remember this morning play where I showed you that consolidation pattern right here? That consolidation breakout was right here. So when they actually came right here and they broke it, it snapped. And it just started going fast. So anytime you have that, it's very important. So that's the question you have to ask yourself. Are they going to defend it or are they going to break it? So you got to ask yourself that question of making a plan. So, but you always have to remember where you're at on that pivot. So let's go back and draw that line. And there's your breakout, right? So this should have just kept on going. I was expecting this by 12 o'clock for them to run this up and then hopefully either do a double top and then come back down, but the fact that they were not pushing this thing up told me that it was a little weak. And guess what? What is this line right here that we had this morning? That was the opening. They were struggling to get back above that opening. It was also when you see how we were defending it here, and then when it snapped right here. It snapped at the open and then dropped. So that was also an important area, of concern. So yes, there's a lot of lines and technical. Again, if you want to keep it simple, just wait for big areas. But I'm trying to teach you technical analysis and how to understand these price actions. So if you've seen in past videos, what I've told you about the 12 and 1230 play and how powerful it is. This goes into the next scenario. So now that I know this is broken out and they've defended this line, then I know that they're probably, I would say a 90% accuracy probability that they're not going to bring this thing back down. That they've picked their directions. A lot of times when they break out, they picked a direction. So this is your like, oh shit line right here. So, but they're going to do it when they want to do it. That's the interesting thing about trading. They're going to do it when they want to do it. And this is what I'm going to show you in the afternoon session. So in the afternoon session, what do they end up doing? 12 o'clock. Where are we? We are, the rule states is, are you above or below a pivot? Well, guess what? You're smack dab in the middle of the pivot, between these two pivots. So, to be honest with you, you really can't do anything. I actually shorted here just because I saw it was weak and you had that line and I got lucky. But it all really came down to this close right here. You see the 5-minute close under VWAP, and even if you got into this, you could have took this range right here, which was 30 points. You see how 30 points are given out all the time. But remember, where are you at by the next TPO, 12 o'clock or 12:30? You are above a pivot and they broke out. So this is just a pullback. This is just they're scooping up the liquidity, they're looking for orders. You should be, you really shouldn't even short this. You should be looking at it and praising the stock market gods that they're giving you an opportunity to scoop. So you're looking for to scoop. If this would have shot up here, you're looking to short. If it shot down here, you're looking to scoop, right? Because you're in between the pivots. And if you did that, 5, 10, 15, 20, 25 minutes later, shot up, okay? So what ended up happening? Shot up, and it should have kept on going, but it didn't. They dropped it back down. This probably freaked a lot of people out again, thinking that they're gonna short it, they're gonna go lower. Nope, scooped it up, and that was the last scoop. And the tail sign that was the key was, look how they're closing these candles. even if you draw a line just on this, that's why candle closes are important. On a 5-minute or a 30-minute, but on a bigger time frame, look at this. I mean, I'm just going to get rid of all this. That line right there, see how they broke it, came down, they struggled. Then finally at this, they finally broke above it and they closed it. And then they defended it. They defended it the rest of the day. They came all the way back down, but see down here where this 730 is, that's the pivot. Right here, that's the pivot. That's the reason why using the intraday pivots are very good to have, but then you gotta be looking at the bigger picture candles. Because the moment you saw this candle right here, they call this, I think either a shooting star or a hammer. You see how it's like, it looks like a hammer? They are scooping the hell out of that. And look at that, right into the next TPO. They held VWAP and they never came back below. And then you just had to wait it out. This right here tells you that by the end of the day, the likelihood is they're going to come to at least the high of the day or more. So even if where you're at right here, that's still a good move if you miss the bottom, right? That right there would have been about a 50, 60 point, actually that was about a 70 point move. So again, that's a lot of information, but you see how it's then trending. You see how that was it, and then it never came back below. It consolidated for 30 minutes, and then came higher, 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 and then eventually the last 30 minutes, they broke. They were above. They held this intraday or the intraday mid-range pivot, and then they just kept on going. But they didn't have enough momentum. The day was ending. The day ended right here, and they couldn't get up to the multi-day pivot. So anyways, this was a lot of information, but I also want to show you why 5-minute candles are so important, because it breaks down your 30-minute candles. So when I say that is, going back and looking at charts and seeing when moves happen. So when you're impatient and you look at the clock down here and you go, ooh, we're about to hit the next 10 minutes of the last candle. Watch what happens. So look at this. Boom, boom, last 10 minutes, down. This was the last 15 minutes, right? But right here, last 10 minutes, shot up. This was the last 5 minutes and the first 5 minutes of the next TPO right into support. But you'll notice a lot the last 10 minutes or even the first 5 minutes of a candle, the majority of the move happens. Anything in between, there's a lot of times chop. So you can see right at and so here's let's go ahead and talk about the 12-12-30 play. So remember this 12-12-30 play right here. So what did we do at we were above this line. What is this line right here? This line was this line right here. Okay. So you see this 4-hour candle. So these are 30-minute candles, the overlay. You see how they wicked it and they kept it above, and then the next TPO it's above. So that's telling you that that's sort of support. And that's the previous day close of those candles. All right? So you follow me there? So look what happens the first 10 minutes of 12:30. 12:30, remember, is the new TPO of the 4-hour candle on the bigger time frame. So first they just shot it up. They shot it up. But then they couldn't hold it and they brought it back down. So then it was 1 o'clock where they consolidated, and look what did they do? Last 10 minutes of the candle. This was at 1:20. Boom, boom, and they shot it up, and that's where it created this hammer, and then they consolidated it, and they just sort of slow grinded it the rest of the day. So very tricky to play, very tricky to play. That's the reason why I really implore you to really just, look, even if I just get rid of everything, any lines, just look at anywhere near a pivot you get in, and yes, it's frustrating when, you get in and you think it's going to go long and it breaks through, but it's just part of the game. You can't have that PTSD. You just have to watch your risk reward and hold for the bigger picture if you see what's going on. So that's what they were doing. They were scooping this up, scooping it up. And then it's sort of like a U shape, right? Boom. This was a U shape down. And then this is a U shape up. So what they ended up doing is they actually, this was perfect. I just noticed this candle, the 690. They filled the gap. So this was a gap right here. So when they opened here, all of this was pre-market. So a lot of times what they like to do is fill the gap. And they filled the gap and then they reversed it. What do you think they're doing right now? See this massive gap right here? This was the CPI gap. They're trying to fill it. Let's see right here. Right here. They opened it. Oh, they opened it down here. 300 points. So the moment they came down and they came back up, fill the gap. So tomorrow, anything could happen. Anything could happen. They could end up using this as resistance and then coming back down, or they end up squeezing everybody out and they end up going back up. Because look at this. We actually still are in a trend. So if I go to a ribbon, technically we just broke back above the trend. So you see what happened 2 weeks ago where they dropped it and they broke back above and then they squeezed everybody out. So if they break back above this area right here, I could honestly say by the end of the week they might even go all the way back up to the bull pivot and end the week there. And you'll be scratching your head like, what just happened? I thought we were going down. And that's how they're able to get the momentum. Because think about it, if everybody's long, if everybody's long, then everybody's making money, right? But that's not how it works. I mean, somebody's got to pay for those people who are winning. So that's why they got to have some losers to help pay for the winners. So that's how the market works. It just goes in waves, you know? So be really careful of being biased, right? And anything could happen. Like this morning, absolutely, this thing could have came up and then reversed, right? But that's why you use these pivots as your line in the sand. So anyways, good luck. This was really long. Sorry about that, but I'll maybe go into it and have a session specifically on multi-day pivots and playing, and also using some different techniques. But that's later on if I end up doing a course. But this is just a daily review and lots of information. But like, just look for patterns, fake breakout reversals, pivots, closures of candles. That's it. VWAP was flat today. So anyways, good luck.